Welcome to a new update, and in this update we are going to check out some altcoins, how to trade those, how I'm trading those, and why I'm not chasing certain assets because they have been doing really well. Before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also, make sure to check out our free trade letter 3 times per week. We are generating an update for you through a newsletter. Today, we're going to do altcoin setup, so you can find it in the description beneath. Also, the final day of the 30% lifetime discount is taking place today. So, if you want to join my copy trading, you want to join a premium platform with trade ideas on Forex and crypto and way more, make sure to use that today as well. So the first one I would like to discuss is Fetch, and Fetch is one that has been going absolutely mental. We went from 6 cents towards 60 cents, taking out all these highs. So it could be that with this structure, taking out these highs here, we probably are at the end stage of this run for Fetch. I think that if we continue to rally, we go towards 90 cents, but we could also easily correct all the way back towards 20 cents to 30 cents and have a buy the dip season there. Which brings me to a point that I'd like to make, which is if you buy Fetch at 55 cents, your upside is maybe 90, but your downside is approximately 20 to 30 cents, which means that if you buy there, the upside is maybe 60%, but the downside is also 60%, which makes it very risky to make the trade. For instance, if you buy Fetch at around 9 cents, when everything is bottoming out and Bitcoin is at 20K, your downside is still that it could go down 50 to 60%, of course, but your upside is 5, 10, 20x, which makes it a more profitable trade to make. And you can also understand that at 9 cents, most of the people are not interested into the asset, so they are not positioned long. They most likely are selling the asset because they don't believe in it anymore. But right now, Fetch is all over social media. Retail jumps into it, so the most favorable position to have, or the most high position to have, is your long entry, which ultimately leads you combined to a case that you should be taking profits overall. And I think that if you have been taking or have been making profits on Fetch, well done. Looking at the daily time frame, I think there are a few levels that I would be marking if I trade this one. First of all, if we get a correction towards 30 cents, probably I'm going to be a big buyer there, ultimately because it's going to give me a bounce of 50% towards this block here, or it's going to be the low of this correction and we get a new swing push. So that's my first region to buy the entry from. Second, the area around 43 cents is the level that I would like to start making buy entries from in terms of day trades. This entire block is your first level to get a bounce from. Most likely we take the liquidity there and we have a runner from 44 cents to 54 cents. I will dive more into this topic on a later point. Second chart that I would like to use for this one is the levels that I've been making on Fantom. Said that the same conclusion can be drawn here. 65 cents is a level that is based on higher time frames. The previous low block here, which most likely is becoming resistance, which we have been seeing here as well. If you use the order block theory, you can easily understand that this block around 48 cents is going to be giving you a massive bounce at this point, right? And in this case, we most likely see it as well. The candle is doing well. If we don't get it, we are looking at 38 and we're looking at 33 cents, that entire region for either swing entries, or second, we are just buying the bounce in which we can generate a bounce of 50% again. In this area around the level of 50 cents, we can see that we are looking at an entry, and I've been marking this earlier already. We can also see that we've had a bounce here at 52 already, which resulted into a rally to 60 cents, which ultimately brought a short trigger, which I didn't trade, but it gives you a short trigger. So here in this area between 47 to 50 cents is the entry point. Ultimate trigger is the trigger at 52 cents. And if we break that, we are going to look at a rally towards 60 cents again, generating a bounce of 20 to 25% for you. And if it drops further, this is the area that I've marked already. That generates you the bounce of 50%, right? Now there's another one which is the graph, which makes it a bit more complex because we've had this big run taking place here. We can mark the levels again. We can mark the level here as a daily, which is 9.5 cents, and a second, if we get there, 13 cents is the ultimate next trigger because 9.5 cents is probably going to give you the best entry for the next swing trade. 13 cents most likely as well, but it at least generates a bounce of 50 to 80% for you, which is great if you want to start trading a bit more, and then you just remain to be patient and it generates pretty high profitable trades overall. Now, when we're looking at the 4 hour, we cannot see a block here, which means that there is no confirmation of an entry point. On the 1 hour, we can see this low, this entire block here, which could be giving you a trigger. I would definitely trade this one, but lower sizing, way less confirmations, lower time frames, which ultimately means lower sizing. And then if we have this trade trigger here at 17 cents, most likely we're going to get a breaker through 18.5, and then we start targeting 20 to 21 cents, which also gives you 25 to 35% trade. I hope you have been enjoying this small update. I'll be covering this way more next week. Subscribe here, make sure to hit the like button, and I'll see you again tomorrow. Ciao.